Switching gears, escalating trade tensions between the world's largest economies. China vowing to retaliate after President Trump announces a 10% tariff on roughly $200 billion in Chinese goods. The new tariffs go into effect next week. They will rise to 25% on January the 1st. Here's what White House Office of Trade and Manufacturing Policy Director Peter Navarro told me earlier this hour.
Every week at the White House, I have groups come in to talk to me about how the Chinese are just playing unfair and driving them into the ground and putting them out of business. If we have those tariffs in place, American companies will be able to make things and American workers will make them with their hands. So that's a good thing.
But China may use the country's rising property prices as leverage against President Trump's new tariffs. Joining us now, international real estate attorney Ed Mermelstein. Ed, can you explain how this is going to work? How can China use that against us?
Well, if they're going to prop up their economy by relaxing lending on real estate, the likelihood is that we're going to start seeing prices escalate, more construction, more purchases, and the market's going to some degree take off in a similar fashion that we saw in the United States back in 2003, 4, 5.
Okay, so the reason it's important is about 2/3 of the Chinese people, their assets are tied up in property. It's also part of the government revenue, et cetera. And like you said, this will create new jobs. But prices have been rising for about 3 years now over in China, and they are starting to put restrictions on some corporations from investing in residential property. I know that. So how do you see, what's the best way to move forward and continue the momentum in the housing market, and how much will really offset the pain coming from tariffs?
Well, we're going to watch how things play out, because we saw in the United States it didn't work out that well only 10, 12 years ago. So most likely we're going to start seeing a similar situation in China, where there is going to be somewhat of a short pop, similar to what we're seeing in our tax situation here in the United States. But in terms of long-term effect, that's yet to be seen, and the expectation is it's not going to last too
Kevin,
long.
real quick.
Yeah, I think it's important to note that in the Chinese markets, you actually have private equity firms raising billions of dollars to invest over there in the property. Blackstone, $7.1 billion, their new fund. Also here in the United States, we've had over $25 billion raised for real estate. It's showing in an inflationary environment, real estate's a way to seek refuge.
Well said.
And Carlyle actually just stepped out of China recently, so we're seeing the repercussions of overheated market in China.
Ed, thank you so much for being here.
It's my
Great
pleasure.
to see you. Please come back and keep us posted.